Hello and welcome to The Trade. Before we get into the charts, a quick look at what traders are watching, with US factory activity growing for the first time in a year in January, new orders rebounding sharply, but import tariffs raising raw material prices and straining supply chains. New orders, employment and prices paid indicators all rose. The FOMC member Raphael Bostic, meanwhile, who retires this month, says he doesn't project any interest rate cuts this year, going on to say that he thinks there's been so much momentum in the economy that the policy rate is already in a mildly restrictive stance. On the geopolitical front, Iran said talks with the US over a new nuclear deal could get underway in coming days. And President Trump agreed on a trade deal with India that slashes US tariffs on Indian goods to 18% from 50% in exchange for India lowering trade barriers, stopping its purchases of Russian oil and buying US oil instead. US Treasury yields rose as traders consider if the Federal Reserve Chair nominee Kevin Warsh will take a hawkish or dovish approach when he resumes the role in May. And that's where the cash rate here, the 3-year, is sitting ahead of an expected rate hike this afternoon. Let's though get into the charts and of course have a look at the precious metals space. Peter Maguire from trading.com joining me now. Pete, we could see the RBA hike this afternoon, but obviously a lot of focus has been on gold. A little bit less of a parabolic move though overnight.
Absolutely. Good morning, Juliette. And I tell you what, yes, quickly on the Aussie, 75% probability of a rate hike. And as we move to gold, I tell you what, in the last probably hour and a half or hour, it's the best part of $135 up in Asia trade. So it's very, very strong this morning. And, what we saw is the big washout. Everyone's mindful of it, of where we've been, and, nearly 5,600 as a high, and we had a low at 43.30. So plenty of movement back at that 47.85, 47.90 at the moment. And I think the one word that really wraps it all up is volatility. And if you want to learn how to trade markets, I think this is a perfect time to observe, not necessarily trade them, but just observe the big moves that we're seeing in intraday, and that gives traders a good understanding of what it's all about. And, when you're thinking about the painful sell-off and the steepest in decades, Juliette, the CME also raised margins for metals and futures. Kevin Warsh appointed Fed chair, the not-so-ultra dove. And you've got balanced geopolitical tensions between the US and Iran, along with sharp Wall Street pullback, likely encourage profit taking ahead of Friday's non-farm payrolls, which will probably take us to about 70 to 75,000 jobs. So it's, game on. And I think it's going to be quite exciting for traders for the rest of the week leading into the NFP on Friday, Juliette.
Absolutely, but also the big game here, Pete, the RBA this afternoon. And if we do hike, that is likely to see the Aussie spike again. What are we seeing in currencies?
Well, when you're thinking about it, yes, probably best part of 75% probability of a hike this afternoon. You've got very, very sticky inflation running at 3.6% in Q4, and it's accelerating to the upside. Cash rate stands at 3.6%, with only the Fed and the Bank of England having higher borrowing costs, and both are expected to ease further this year. So that'll probably put us at the top end as far as mature markets as highest interest rates. And you would have to think probably the way it's going, another 25 basis points in by Q4 for the RBA. So yes, it's a booming economy. Aussie dollar will probably take a little bit of a leg up. And it's been, again, very volatile over the last couple of sessions due to volatility with the US dollar and, of course, all the other moving parts.
Let's get then into what we've seen more broadly with the US dollar index, Pete, and particularly as, we're looking at this interest rate differential, and we've also had the nominee of Kevin Warsh. What are you seeing in the technicals?
Well, yeah, first off, we had a big sell-off, Juliette, from that 98, 98.50 all the way through to just over 96. Then it's bounced to the upside, and it's bounced aggressively as far as that US dollar. And I think that was the news as far as Kevin Warsh and what the market was expecting. You're currently running at about 97.6 as that US dollar index. Very, again, extremely volatile. And, if you're looking at it across from Aussie dollar to all the cross rates, there's plenty of action there to, really look at opportunity to trade. And one only has to look at, the yen over the last couple of days, what you've seen in that, and the euro, of course, 118. We were nudging that 121 number. So that just demonstrates big swings. And if you want to trade markets that are volatile, have a look at currencies over the last probably 3 to 4 sessions and moving forward to the NFP. That'll give you plenty of opportunity to, throw your hat in the ring.
And I guess also speaking of volatility, silver too, Pete. What are we seeing there?
Hi-ho, silver away. I tell you, you were at 121, Juliette. Just put your mind at this one. $29 this time last year, now at then 121. If that's not parabolic, look at that. I mean, that chart is just gold. Well, it's not gold, it's silver. So it's unbelievable, ratchet up. And then the big washout, down 36% odd. What you saw was the huge washout. What you're going to see again is volatility. Big moves this morning in Asia trade. I'm looking at this. It's up 7%, $5.40 from the lows of, earlier this morning on New York. It's just been one-way traffic and everyone's stacking positions again. So volatility, opportunity. You can look at stochastics, you can look at moving averages and RSIs, but again, you've got to look at the market fundamentally and see the big swings, Juliette, and those intraday trading opportunities where you see 7% moves in a matter of 2 or 3 hours. That is volatility, and it's not for the faint-hearted, but if you want to learn again, study these markets closely.
All right, not for the faint-hearted indeed. Maybe stay the long run for a lot of people. Pete, always appreciate it. Thanks so much. Peter Maguire from trading.com. That does it for this edition of The Trade. Be sure to join us next time.